How's it going, everyone? Today is August 11th, 2023, and we have a really special show today. Not only are we going to be talking about the news of the week, PayPal launching their own stablecoin, breaking news, looks like SBF from FTX was just put in jail, denied bail. That all rhymed really suspiciously. I didn't plan that out. And all sorts of other news this week. But on top of that, we're going to start the show with a special guest here, Matt Black from Atomic Finance. We got the collab going here, Kinetic Finance, Atomic Finance. And yeah, Matt, you have something really interesting. I put it in the description, but what you are pioneering at Atomic Finance is DeFi on Bitcoin, yield generation on Bitcoin without giving up full custody of your keys. And that is such a foreign concept to many people. There's a lot of intricate parts here, but I want to dive into it with you. So maybe right off the top, you could explain just briefly to the audience why you kind of started this platform and like a really brief explain it like I'm five explainer of how exactly people can get yield on Bitcoin without giving up their keys.
Yeah, great question. Thanks for having me, Julian. So as a quick explain like I'm five, why did we start building Atomic Finance in the first place? Myself and my co-founder, we actually, I originally got into Bitcoin back in 2014. My dad introduced me to Bitcoin. And we a few years later, we started building in the Ethereum space. Actually, we were shitcoiners. We were really interested by the idea of what if you could get access to financial tools anywhere in the world, anytime. And obviously, Ethereum seemed like a really, great ecosystem to build that. The problem was there's lots of surface area for attack in Ethereum. There's lots of hacks that have occurred. You've probably heard about Curve Finance being hacked for $70 million last week. And so and the other thing too, is we asked ourselves the question, what is going to be around for the long term? Is it going to be Ethereum? Is it going to be Solana? Or is it going to be Bitcoin? And the answer to that was really simple. Bitcoin is going to be the asset that's going to be around for the long term. And so we wanted to build infrastructure for that asset. The other thing as well is when you're building on Bitcoin, you can build it in a much more secure manner. And so it's much less likely for these hacks to occur. And so what we did was we took some kind of foundational tools that exist on Bitcoin. And what we do is we allow folks to earn a return on their Bitcoin using options trading strategies. For those of you that are familiar with options, you might have heard of a covered call. It's a really simple instrument that allows for you to give the right to someone to be able to buy your Bitcoin at a certain price. But what's great about this instrument is you either win in dollar terms or you win in Bitcoin terms. And so we run a really simple strategy that's transparent that allows folks to make a return using that strategy. Yeah.
All right, so let's go let's zoom out a little bit here. We're gonna pretend that my audience, the only as deep as they've gone into Bitcoin is maybe taking self custody of their own Bitcoin through like a single signature product, like they're moving it from their exchange to their ledger. And so one of the fundamental ways that Atomic Finance is different is that compared to BlockFi or Celsius or any one of these now bankrupt platforms, is you would have to take your Bitcoin from an exchange or a wallet that you had the keys to and completely transport it to another wallet that you didn't have any of the keys to. Now, Atomic Finance works differently because it uses multi-sig. Can you kind of explain maybe just quick for our audience, like what multi-sig is, and then who are the different players involved in this kind of shared custody or shared signature setup?
Yeah, that's a great question. So multi-sig is a really simple primitive within Bitcoin. It's like having another, signatory on your funds. So, if I set up, say you and me, Julian, we wanted to set up a 2 of 2 multi-sig, I have one key, you have another key. And so if we want to exit, if we put our funds into that 2 of 2 multi-sig and we want to exit, it requires a signature from both of us in order to unlock the funds. If we don't have that signature, we aren't able to get the funds back. But what this means is that if I myself, I want to go steal the funds, I can't do that. You can't by yourself go steal the funds. And so it makes sure that you can't have the funds stolen as easily. And so what this looks like in our current setup, we use what's called it's kind of like a smart contract on Bitcoin, but in simple terms, it's called a discrete log contract, but on chain, all it is a 2 of 2 multisig. So imagine, Julian, imagine you want to enter into one of these contracts with me. Maybe you want to enter into a simple futures contract, right? You want to go long on Bitcoin. You want to go 2x on Bitcoin. And I'm the market maker, for example. Well, you would just enter into one of these contracts with me, and we would be in a 2 of 2 multisig. So I can't run off with your money. You can't run off with my money, which means there's no counterparty risk. And when the contract is finished, we're able to execute the contract and get our funds back. But you might be asking the question, well, how do we do that? Do we have to agree? What happens? Well, what happens, Julian, if you disappear? What happens if I disappear, right? How do we get the money back? Well, it's really simple. Inside of these contracts is what's called a oracle. What is an oracle? An oracle is really simply, it's just the ability, it's really just getting the information off chain. So if I look in the Bitcoin blockchain itself, I don't know what the Bitcoin price is, right? I don't, like, the Bitcoin blockchain doesn't know that Bitcoin is $30,000 right now. And so what we use is an external party that provides that data. And when they provide that data, it allows us to unlock the funds from the contract. So these contracts, they can be used for bets. You could bet on the presidential election if you wanted to, that's upcoming next year. You could use it for futures contracts. You can use it for options contracts, anything under the sun.
Nice. So yeah, like that maybe brings me to my first question is these oracles. So I've heard of oracles before. When I was really big into Ethereum, that was all the rage, is that, oh, we can have decentralized betting. We can have, betting in contracts that can't really be censored by anyone, because essentially you have, I don't know who runs these oracles, but maybe you could break that down. Like, I've always thought, well, maybe AI would be a good thing as an oracle, like a automated computer that could just find the truth in numbers or statistics or results for things. But who are these oracles? Like, who is verifying what the actual Bitcoin price is at any given moment?
Yeah, so the reality with oracles is there does require to be some trust. So, even in your example, hey, what if AI was running the oracles? Well, who's running the AI, right? And so the person who's running the AI really has the keys at the end of the day. So the reality is like, it's a different trust model, right? It's not as secure as just holding your Bitcoin in cold storage, but it's a lot more secure than just holding it on an exchange, which just has full custody of your Bitcoin. So at the end
Which
of the
has a black
day,
box. Yeah.
it's just which is
We
just a
can
black box.
see the same data technically that the Oracle's seeing. It's not like the Oracle is seeing something that is not public. The Oracle is just saying, this is the data point that I am using, and you can verify that. And you can see the history of an Oracle's, decision making based off of, whatever sources it's using, correct?
Exactly. So you can see transparently exactly what the Oracle is attesting to. And it's really just a trusted party that's doing that. There's some folks out there that claim, oh, we have decentralized oracles, but those can be manipulated either on chain. Those, if they're all anonymous, you don't really know who they are. In my opinion, like, really the best case scenario for oracles is, if you have either a trusted company or a trusted party that's running that oracle, or if you have multi-oracle where you're spreading that risk among like several trusted parties, then you're a little bit less concerned. You might ask yourself as well, like, why is this better than, if I've just learned about multisig, right? We can set up a 2 of 2 multisig between each other. Why wouldn't you just set up a 2 of 3 multisig, right? Why wouldn't you just set up, with me, you, Julian, and the oracle as the third one? Well, the thing in that case is that the oracle, then, like, they could favor certain individuals. They could say, oh, I'm going to give Julian some more money here, but this other user, they lose. What's nice about the oracle is it's very transparent to everyone. They're broadcasting it to, everyone on the internet, exactly what the outcome is. And you can go and you can verify that. And anytime that they mess up in that attestation, you stop using that oracle for the next contract you want to do.
So let's walk through this a little bit. Atomic Finance right now, it is just an iPhone app. I believe it's in test flight. So if you have an iPhone, you can go and download it and you can check it out for yourself. But I want to run through basically the back end process. I have, full disclosure, I have put some money into this just to play around. It's not a significant amount. I just, I always like to have skin in the game when I try things out. But my setup process was I set it up. I had a multi-sig address generated for me, and then I deposited Bitcoin on chain onto that address. Now, as soon as that real Bitcoin goes into that address, then what happens on your guys' end?
Yeah, that's a great question. So actually, before you invested into that address, we created a bunch of transactions that aren't broadcast yet. And those transactions are basically all the possible outcomes that could be created. So, what happens if you make 0%? Well, there's a transaction for that. If you make 1%, there's a transaction for that. If you lose 2%, there's a transaction for that. And those are all stored actually on your iPhone itself, on your device. It's also stored by the market maker. So when you were entering into this contract, you were kind of negotiating the parameters with the market maker. This sounds really complicated, but it's actually super simple. You just have to press a button on the app, and it does it in the background. But all of this information is stored in the background for you. And then when the time is right, and that oracle goes and actually attests to the outcome, you're taking the oracle signature, and then it validates one of those transactions that hasn't been broadcast yet. What's nice about that too is in that process, you also create a refund transaction. So in the case that something goes wrong, like say the oracle disappears off the face of the earth, they're no longer there, or they lose their private key. Well, you now have a refund transaction that you can use to get your initial investment back, which obviously like reduces the risk for you a lot.
So one of the challenges about this, I like to kind of think a few steps ahead, is right now this is done through multi-sigs on chain. And so not an issue right now when fees are like, 20 cents to send Bitcoin, not a big deal when there's no congestion in the network. But moving forward, I think we all as Bitcoiners understand that the security model for Bitcoin is going to be much more weighted towards transaction fees in the future. And, in order for miners in the year 2040 to be making as much BTC as they're making today, transaction fees are going to have to be a lot higher. So how does a product like this work in a world where maybe transaction fees for sending Bitcoin is like $50 and I've only put in about maybe 1,000 into something like Atomic Finance?
Yeah, so I think where that's really headed is just as we're trying to scale Bitcoin in with payments using something like Lightning Network, it's also possible to put these contracts, these discrete log contracts, or betting contracts or futures contracts. We can put them on Lightning Network as well. And so what
Okay.
that will look like is you'll be able to, we saw like fees skyrocket in the past. There's going to be a point in the future where Bitcoin network fees are going to be continuously high, and it's never going to go lower again. And so if we can get these type of contracts on top of Lightning Network, you could enter into contracts for several months in a row. You could do like a couple here, a couple there, and never have to do a transaction on chain. And maybe you settle on chain once a year or twice a year, and that's your settlement transaction that needs to happen. Yeah.
If the funds though, I'm trying to think about this. If the funds are moving though into like a Lightning setup, and the way that you have it currently is you kind of have to. This is a little bit in depth, but basically, maybe you can explain to the audience how you have to kind of roll into each one of these new contracts every single month, because that's what makes this different. Is it's not 100% passive. You can't just deposit once and be done. You have to kind of consent to rolling into these new contract periods. Maybe you just break that down a little bit and why you have to do that.
Yeah, that's a great question. So one of the things here is that with all these other black box products, right? If you remember BlockFi or Celsius, you just deposited with them and you set and forget your Bitcoin, and you come back a year later, or 2 years later, 3 years later, you hope to get your Bitcoin back plus
Yeah,
a
if they didn't
plus.
rug pull on you, maybe you have some interest.
Yeah, exactly. Like if you removed it before that, you would have made some money. And so in this case, what we do is with the contracts that we do, your Bitcoin is actually returned to you every single month. You get that back in your custody, and then you make the decision whether you want to invest in the next month. And so we do that to make sure that the users know, first of all, that they're getting their capital back, but also to we don't, we can't have a lockup of capital for too long for the market maker, right? And so you invest like on a monthly basis. So once a month, you come back to the app and you just click that button and you can invest in the next month. and that Bitcoin's returned right back to you. So what this would look like with something like Lightning on a higher layer is that you would go and enter into kind of a Lightning channel with the market maker. And then all you're doing is each month you would, enter into one of these contracts for a month at a time. And instead of settling it on chain, you instead settle it within the payment channel itself. And then that gets settled within the payment channel, and then you can enter into another one. So at any point, like if the contract is the financial contract is finished, you can settle that contract and then settle the payment channel in order to go on chain, or you can continue for another month in another off chain financial contract. And so this can really allow for the financial layer of Bitcoin to be non-custodial and for you to have self custody of it or shared custody of it, but also scale as well.
Nice. Yeah, that's got to be one of the biggest concerns I have, at large with the platform, because it's just like we're living in this fee utopia. I try and tweet this image once a day that if like we ever hit hyper Bitcoinization, it's going to be wild to look back and see like, low fees be like 4 sats or 3 sats of V-Byte or whatever. But like I just can't picture that 10 years from now. So next question. They have this famous saying in the world of Bitcoin, in the world of finance, if you don't know where your yield comes from, you are the yield, right? And so with these black box products, BlockFi and all these other ones, they said, oh, we're giving them out to these, institutions, and they're borrowing from us at this rate, and we're giving you a chunk of that. Atomic Finance does not work that way. You guys sell covered calls. At least that is pretty much principally your strategy right now. Maybe you could break that down for a non-finance audience. What is a covered call, and how exactly do you win or lose when you enter a strategy like this? And I'll just pull up this little image here. Maybe you could work off it or just explain it in your own words, essentially.
Yeah, I'll use this. This is a great image, Julian, and I think we'll use this, and we'll also talk about it a little bit in terms of Bitcoin terms. Here they're talking about a stock, but just imagine you're doing this with Bitcoin. So imagine you have one Bitcoin, for example, and maybe you bought it at a cheaper price in the past, and the classic example is during a bull market. In the last bull market, lots of people were talking about selling a cover call at $100,000, right? And so they were like, hey, you know what? If Bitcoin goes up to $100,000, that's when I'm willing to sell. So certain people have a certain price target in mind that they're willing to sell at. I'm willing to sell at $100,000. I'm willing to sell at $150,000. So imagine that
And
you sell.
let's just break this down like really, really simply too, because I know some people here know what options are and some don't. But like the easiest way I like to explain it is you have a piece of property generally, and you can generate coupons to redeem that piece of property at certain prices. And the market can decide whether or not they want to buy these coupons. So like you're saying, like a call would be, well, you're allowed to buy my Bitcoin for $100,000 by X date. Now, if the price never goes to 100,000 in dollar terms, then that coupon is kind of worthless. And I guess like the closer you get to that coupon's expiry without the price being $100,000, the more worthless that coupon gets till it goes to zero. And then if the the price of Bitcoin does go over $100,000 and you're still selling this coupon that allows you to buy my Bitcoin for 100K, the price of that coupon is going to rise at some basic like leveraged amount of what the price of an actual Bitcoin would, right? So you have the coupon price, and then you have the price that you're allowed to essentially get rid of your Bitcoin for. So how would you explain it? Is that kind of like how I like correct way of explaining options essentially?
Yeah, that's a great explanation. I think for reference, what you referenced in a coupon, that's what they're talking about in the chart here, which is the option
Mm-hmm.
premium, right? The coupon is the option premium. And then a call is simply it's always above the current price, right? So it's
Yeah.
the willingness to buy Bitcoin at a higher price because you think that
Mm-hmm.
it's going to go even higher. So right now Bitcoin's $30,000. If I think that next week Bitcoin's going to go to $40,000, I might be willing to buy one of those coupons or one of those call options in this case for $35,000 because I know that I'm going to profit over that $5,000 difference. But
Mm-hmm.
so that's buying a call, right? So that's I'm willing to pay the option premium, or I'm paying for the coupon for the right to be able to buy that Bitcoin, at that higher price, which is, in my opinion, is going to be even lower than what it's eventually going to be.
Yeah, so that's that's awesome. So that's the buyer's side of the market. So the reason that you would buy a call, or the opposite would be a put, if you think the price is going down, is because you think the price is going to move in a certain direction and you want to profit by being right. You're essentially gambling it's going to be a certain price at a certain time. And if you're right, you make a lot more than if you just bought the instrument, naked, or if you shorted it and you don't need as much leverage. You can just, use this coupon essentially to get much more leverage. The other plus side in this as a buyer is you have limited loss. So the coupons might sell for, $10 or whatever, right? To get a covered call or something, or to buy a call option. The most that can go to is zero. If you had to buy the underlying thing that the coupon represented, a Bitcoin that might be worth $30,000. If Bitcoin goes to zero, you could potentially lose a lot more. So there's less downside risk as a buyer of, let's just say, a covered call. Now, sorry to interrupt, but let's dive into the selling. So I have the Bitcoin. I can make my own coupons. Why would I do that?
So if you think that Bitcoin's either going to go sideways right now, it's going to go down, or it's only going to rise slightly, then you might be in a position where you're comfortable selling a call, right? So if I think that the market right now, it's been sideways, it's going to continue to be sideways, I might be willing to, those would be two reasons. I might be willing to sell a call because, hey, I think Bitcoin's going to be above $35,000 by next week. I might be bullish. I'm very bullish on Bitcoin long term, but I just think, hey, it's not going to happen next week. We're not going to have the God candle next week, right?
Yeah.
And so what I get for doing that is I get a return, right? It's like as if you put a sell order on the exchange and they're paying you to put that sell order at a certain price, right? And you basically get paid for doing that. And you can earn a return on your Bitcoin, right? Your price target might be $100,000, but you're as it's going up to $100,000, you're redeeming that coupon up until the point that it hits that, and so you end up with a lot more than, if you had one Bitcoin, you end up with a lot more than $100,000 because you were redeeming these coupons or these premiums as you go along. And so what we do within the strategy is we know that most folks are very bullish. And so we use TA filters to basically detect downtrends or sideways trends and avoid uptrends, so that you can you might, in our strategy, for example, you might only sell a call once a month or twice a month, and the other months you're not doing anything because there's a potential for a rise in Bitcoin price, but you can profit in the meantime. So it's basically like monetizing Bitcoin's volatility, right? We're all bullish on Bitcoin long term, but while Bitcoin's volatile and while we're in this transition from a fiat world to a Bitcoin world, you can make that return over time. And we make that really transparent to say, hey, we've selected this time to sell a call. Here is your coupon. Here's your premium that you're going to receive. And it expires in a week, right? We always do weekly options, so it expires a week later. And if it's below that price, you earn that premium. And if it's above, then you get less Bitcoin back, but you earned more in dollar terms, right? And so that's the basis of the strategy. Yeah.
So this is the part where I want to explain a little bit of the risk to this, because as a buyer of a call, I have limited downside risk and I have unlimited profit potential. If I am buying a coupon for something, I think that's going to go up to like $100 when it's 50. It could go up to 100. It could go up to 200. It could go up to 300, 1,000, whatever. I have unlimited profit potential if that thing just wants to rip, right? And if it doesn't want to go above 100, it just goes to zero and my coupon goes to zero. And that's not a big deal because the coupon is usually, not nearly as big as a position as just going long the underlying. Now, as an option seller, you have a little bit more risk. You have unlimited risk because the higher the price goes, the more expensive that coupon is going to be that you sold at a certain price, if I'm correct. So how do you mitigate that risk? Because I imagine in your situation, the riskiest thing that could happen is you wake up overnight and Bitcoin's doubled, right?
So I would say, like, first off is like I know a lot of people talk about the concept of a God candle in Bitcoin, Bitcoin doubling overnight. But let's
Mhm.
remember that as Bitcoin has been around for longer periods of time, it has become more and more stable. The amount of volatility has decreased. I think the largest increase we had in 1 week was back in 2017. At the beginning of December, we had a rise from like one Friday to the next Friday, a rise of 45.7%, I believe it was.
Mhm.
And so, the likelihood for in 1 week, because we always do weekly options, the chance for Bitcoin to double in the course of a week is very, very unlikely. Also considering that, we're now, entering into kind of the third bull cycle, likely next year or the year after. And so, definitely keep that in mind. It's still possible to have like a large rise like that, but you're going to have lots of volatility leading up to that before that point. And so that's one of the reasons also why we chose to do weekly options, because the likelihood for that amount of price jump in that short period of time is very unlikely. The other thing as well is we also choose options that are a certain percentage out of the money. And so say today, an example might be if the Bitcoin price is 30,000, we might only choose a call that has a strike price of 34,000. So Bitcoin can rise all the way up to 33,500 during the week. If it goes above 34, that's when you start losing Bitcoin, losing money. You've already gained the dollar amount going up to 34,000. But after
But you
34,
lose
you
the
start
nominal
losing money.
Bitcoin amount.
Yeah, and you lose
So,
it in Bitcoin
but
as well. Exactly.
that's my question. I want to give you a hypothetical scenario because this is what makes this product's risk, I would say, a little bit different than the risk seen in these other things, where essentially they're loaning these out. We don't know the
Mhm.
black box of the counterparty, but essentially the interest that you're paid is just it's a percentage of the interest that the person who has your Bitcoin is getting paid. In this situation, I want to give you a hypothetical. Let's just
Sure.
say you are selling $34,000 calls on Bitcoin. The price of Bitcoin today is 29,000. All of a sudden, overnight, it starts ripping ass and it's on its way to like 40, 50K. Do you get rid of that call before then? Do you hold it to expiry and take the loss? Like, how are you managing a risky situation like that?
Yeah, so what's really interesting about the strategy, you might think, hey, you know what? You should in this strategy, you should have a stop loss in place, right? You should have something that prevents you from going all the way to 50K, for example.
Mhm.
By the way, going all the way to 50K, that would be more than a 45.7% like increase. So very unlikely to occur in the course of a week. But
Mhm.
let's just say for
And,
the
and it's
case of
fine. It's like we all make
yeah.
dollars at the end, right?
Yeah.
And that's fine. But in the future, when we're using these Bitcoinized products, it's going to be a real shock if all of a sudden I wake up to a whole amount fewer Sats because of something I
Sure.
didn't understand, right? So how do you mitigate that?
Yeah, that's a great question. So what we've looked at in the past is you might think that it makes sense. Hey, put a stop loss in place before you get to that 50,000 point. But what we
Mhm.
actually found in the process of doing our back testing for the strategy was, and the strategy like historically has taken over like 100 positions. 11 of those ended up being above the strike price, right? So it during the week it went above the strike price, but what occurred is 9 out of 11 of those times, it went back below, the strike price. Because generally, what happens in Bitcoin, you get a large pump, maybe during the middle of the week, and then you have a sell off, and then a
Mhm.
little while later you have a pump again. And so we could go ahead and put, say a stop loss in place, but it's more likely that's actually going to result in more losses. And so what we chose to do was to not put that in place. And statistically, we know that generally, even if it goes above that strike price, it's generally going to go below. And in the few cases that it does stay above, we know what historically the max drawdown of the strategy is, which is just over I think 1.14%. And so
Mhm.
that's kind of the reason why that's in place. Now that doesn't mean that can't happen, right? That doesn't mean that's
Mhm.
impossible to happen. It's
Well,
still
the
possible for
reason that
that to
I
happen.
grill you on this a little bit is because like I was around when a very
Mhm.
similar strategy was employed by every fund on Wall Street, which was the collapse of the VIX, right? Or sorry, the spike in the VIX that destroyed like a ton of these like leveraged short VIX ETFs back in,
Mhm.
I think it was like 2018, 2019. It wrecked them. And the question I have there is like, okay, the price of Bitcoin closes above the strike of some of these covered calls.
Mhm.
You now owe Bitcoin. Some of these people with the covered calls might claim the Bitcoin underlying. And so you got to give up some of that custody, right? Like let's just say I'm a market maker that buys one of your covered calls. It closes in the money. Uh, Market maker wants his Bitcoin. How are you going to do that?
Oh, so that's all settled within the contract itself, right? So these are
Okay.
all Bitcoin settled options, right? So if you're putting up one Bitcoin, right, that's a one Bitcoin contract. And so, if it goes slightly above, right, instead of you getting that one Bitcoin back, you might get 0.99 or 0.98 or 0.96, whatever the PNL is. And so that's essentially how it's called away. These are all
Okay.
European options, by the way. So these are all settled at expiry. And
Yeah,
so and
TJM
it's
just asked
weekly
that. Cool.
expiries. Yeah, great question, TJ. These are all European options. So these are all expire at the end of the week. So these expire on a,
Mhm.
on a Friday at the end of the week. And so when that happens, right, either the user is in profit or the market maker is in profit, and that's how it gets settled within the two of two multisig.
Awesome. Um, all right. Before we move on, because I want to get to some of the news today with you. Um, Last thing I wanted to ask was what essentially is the roadmap for this going forward? So you have kind of this one strategy. Um, I find it hard to imagine it's going to be the only way within your product you're going to generate yield for the next like 20 years. What other ways are you looking at? Maybe different option strategies, maybe different ways of generating yield on Bitcoin in a non-custodial way? What other kind of things do you think are going to come in the next few years with atomic finance?
Yeah, so we're looking at a lot of different, ideas for how we can build different strategies that are exciting for folks and really useful. Obviously, one big one is being able to protect yourself against downside risk in the case of after a large bull run. Why hold the bag all the way down? Long call strategies as well. We're also looking at potentially implementing some manual strategy or manual options. So being able to do a long call yourself or a long put yourself like within the app, things of that nature. Way down the line, we want to implement. Hey, what if in your app you can actually have stability, right? What if you can have a Bitcoin balance and a USD balance, and you don't need to rely on a stable coin? So that's
Kind of
what's
like
on the
stable,
roadmap.
stable stats, basically.
Stable
Yeah.
sats, we call it, absolutely. So I don't know. Our vision is really that there's a lot more things that need to be built for sound finance. There's the only options right now are really custodians, right, on exchanges, and so it's time for us to build out the financial layer for Bitcoin. And we're just gonna keep chipping away at it one product at a time. So excited for what's
Awesome.
to come.
Love it. Okay, sweet. Cool. Well, if anybody has any other questions, we'll put them in the comment section and I'll try and get to them kind of near the end of the show after we go over the news. But yeah, we'll dive into it really quick. If you're not a Bitcoin brainiac and you haven't, gotten into all these things like DLCs and multi-sigs and all that, you're just looking to stack some Bitcoin non-custodially and you want to do it really easy. Beaver Bitcoin, a proud, happy sponsor of the show, have reduced their fees now from about 3% to 1.5%, making them super, super competitive. And again, it has to be one of the easiest ways to get Bitcoin from your bank account to a wallet that you have the keys to. So, yeah, take a look at their offerings here really quick. If you haven't signed up, give it a go. And yeah, we'll get to the news right after this sponsor break. This week's show is brought to you by Beaver Bitcoin. Dollar cost averaging is the most stress-free method to enter the Bitcoin space. And if you're looking for a simplified way of buying Bitcoin in Canada without needing to rely on a custodial exchange, Beaver Bitcoin is your best bet. Beaver Bitcoin lets you set up recurring Bitcoin purchases directly from your Canadian bank account and straight into a Bitcoin address that you control. It's like a savings account in a currency that you actually want, or a Netflix subscription that doesn't suck. And if you don't want to wait to stack sats, Beaver Bitcoin supports instant non-custodial Bitcoin buying via e-transfer as well. Give it a shot today at beaverbitcoin.com. Awesome. Matt, I got a quick question for you. I always wonder, builders in this space, are they already like fully long Bitcoin? Do you still stack sats on the daily? Or is it just like, I got my Bitcoin, I got the equity in my company, I'm gonna let it ride?
Yeah, I think most of us usually stack. I think it depends how early you got in. Like I know there's like OGs that got in really early and they're just selling Bitcoin at this point, right? I'm still
Mhm.
stacking. Still well, I use the atomic finance strategy to stack even more Sats, and
Nice.
so still stacking on the daily. Love the dollar cost averaging from Beaver too. I'll have to try it out one of these days.
Yeah, it's so weird for me because like I DCA out of habit. I've just been doing it for so many years, but I've really gotten into spending Bitcoin a lot more lately. Like now with Noster, I'm zapping people all over the place. I'm donating to like things on Geyser funds. So like it's almost at the same pace, I believe, that I'm dollar cost averaging. So it's almost like I'm putting fiat in the system and then it's just flowing into all these like Bitcoin projects now, which is kind of fun. But I haven't actually counted to see if I've actually stacked any sats really in the last year, because so much of it has just gone out to, random things. They have gambling apps now too. You can do like you can do blackjack and poker on Lightning, which is really sweet. But put that
Yeah,
aside. I think
well,
that
I
for
feel like
most people, like if you're gonna go and buy that $5 Starbucks, like just like make the iced coffee at home and just stack sats instead. But once you're into the Bitcoin space, you start denominating your life in it and you start using it a lot more. It's just like it's like a one-way train essentially. Fiat goes in, Bitcoin comes out, Bitcoin just starts revolving in the system.
Yeah, I feel like it's you need to help the circular economy, like
Yeah.
um if you go out and buy something, like go use your Bitcoin, spend in Bitcoin and then buy that same amount back, right? Now
Yeah.
you're putting Bitcoin into the economy, people are using it. And this is how we're going to, get Bitcoin to become a currency, right? Otherwise, what are we going to have? It's going to be digital gold. It's just going to sit there forever. We got to, people have to use it.
100%, 100%. I think I'm going to start a new segment on the show at some point of like Bitcoin project of the week or Bitcoin creator of the week, just to get some people to like move their sats around. Cause for me, it's like money has to flow. Money is not, I get it. Like there is a store value component, but we got to start thinking in it. We got to start using it and interacting with it every single day. We got to get the Bitcoin daily active user count up. It doesn't count as a daily active user if it just sits in cold storage forever, right? We all got to get Lightning wallets, custodial or non-custodial, and start moving it around. So.
Yep. Bitcoin payments needs to start working towards surpassing Visa.
Yeah, we got to get that lightning volume up.
Totally.
All right. First story of the week. Speaking of moving money all over the place, PayPal launched their own stablecoin for payment. So they started their own PYUSD. I don't know how I feel about the name of that. I guess like PUSD would look weird. It looked like PUST or something. So I guess PYUSD is the ticker they went with. Uh, it has joined the ranks of Circle and all these other stable coins, essentially, that are not quite too interoperable, but are kind of in this basket of onshore stable coins. So you got the USD Circle one. You have, I think, like Paxos has one. There's all sorts of these other ones, but they're essentially US dollars held within financial institutions, backed, one for one, as these on-chain stable coins are kind of let out into the public. The business model, the reason why all these companies want to get into this, it's not to make payments easier. It's because essentially they can just get US dollars from users that want to send money around the world, lock it up in risk-free bonds that yield 4 or 5% in the short term. And the more money they can suck into their institution, the more interest they make. So curious what you think about this. Do you think people are going to use this PayPal USD? Does it have a real shot at upending something like Circle? Or are people going to look at this and say, hey, like Circle's enough like KYC, AML stuff? Like, why would I bother with a PayPal USD? Who is this product for, in your opinion?
I guess like one thing that I wonder about is whether someone like, a company like PayPal is going to be able to kind of convince their existing users to go and utilize something like this, which might be an
Mm-hmm.
advantage that they have over something like Circle. But it's interesting. I think in the like I was wondering myself, like why is PayPal going and integrating a stable coin? Why aren't they just like integrating an existing stable coin? Why aren't they going and integrating something like Lightning Network? And the reality is, like, why are they building the stable coin on top of Ethereum, right? Why are they building it as an ERC20? And the answer to that is because you can freeze it, right? You have a freeze function that exists in there. And so
Mm-hmm.
I think in general, like PayPal may be able to get some traction with this. They're just trying to, add something to their balance sheet. They might be able to convince people within, like, I think they're really expanding the pie rather than like trying to take from the existing stablecoin pie that's out there. But whether they can convert their existing users to use like something like Ethereum or an ERC20, I think remains to be seen. Yeah.
What I really wonder about this is like PayPal has all these apps. Like I believe they own Venmo. And I wonder if like what they're going to try and do is say, hey, like the US dollars you have in our in your account, we're going to start converting those to like PYUSD. They'll still be backed, but you know, now that we can put all your custody dollars into, let's just say, a stable coin, we can start using all your dollars on the back end to buy treasuries. Because I think right now, and I could be wrong on this, but like if you, let's just say you load up a Starbucks gift card, or you know put money in Zelle or Venmo and any of these things, I think they have to hold the dollars legally one for one. But if they're inside of a stablecoin product, they're allowed to go out and buy treasuries. Now, I don't think there is full legislation for stablecoins yet, but I think that's where it's going, where essentially, well, if you can convince your user base to hold it in a stablecoin, then yes, you can use the dollars that are backing your stablecoin to buy treasury assets. Do you think that's sort of the play here?
Well, I remember that what was his name? One of the founders of PayPal back in the day. I remember they talked about the early days of PayPal and how their investors told them, "Hey, if you like, you need to just be holding these this capital, right, that you get from your users, and you just hold it and you do nothing with it. If you try to do anything with it, it is do not pass go straight to jail, right?" And so that may very well be, hey, we need another revenue stream. This is just an abstraction way to be able to get additional revenue. So yeah, that very could well be.
Yeah, it to me, like I'm maybe a little bit pessimistic. I see this as something that might be dead on arrival, where they kind of launch it and they just don't get the critical mass. Because I think the reason that Circle was able to get so much traction was because of these yield platforms. These yield platforms offered a way of people to, you know, to onshore into USDC and lend it out to people, and then the exchanges had USDC trading pairs. But I think if you break down the pie chart of like who uses stablecoins for what reason, right now it's USDT. A lot of that use case is in trading, but a lot of it is for money transmitting without having to do all this KYC AML stuff. And so I don't see these onshore ones that, you know, are basically kind of restricted demographic wise being used as this like store value medium of exchange for other countries. I see them basically staying on shore. And at that point, like, what is the business case? Like, why would I want stable coins versus just US dollars and, you know, my Venmo account? I don't know.
Well,
It's tricky.
it's probably the yield, right? Like they want to, they're going to provide that yield to their users. But I feel like at the end of the day, it's a question of, well, you're just abstracting the risk, right? And
Yeah, exactly.
we saw that with Circle, right? Circle, what happened with when SVB went down? USDC was worth 90 cents on the dollar. And so, you know, how do we get away from a system that's just abstracting the risk every time? Well, you need a different type of instrument. So, but I also
And
know Tether.
that was such an interesting black swan moment, because like for the last 10, it's been like, I think Tether's been around for 10 years now. Tether's had some like unpegging, but I don't think a single Tether unpegging event has lasted more than 2 days. This was like a solid week and a half that Circle, the Fed supported stablecoin, was completely unstable. And so, you know, they've lost like half of their market cap in the last, I think, 4 or 5 months, probably because of that event. The little article here says the company's share in the stablecoin space has declined from 45 billion at the start of 2023, which is down also from I think 60 or 80 at some point, down to 26 billion in just 7 months. So, I mean, I have a hard time figuring out the business model for it. But especially when there's going to be like 20 of these, you know, it just seems muddled that they're not, I don't know, all I'm just surprised that like PayPal wouldn't just go and try and buy a chunk of Circle's business model. They must think that they have a better business model than Circle, I guess.
Or they just want like more, more capital
More
to
control.
manage, right? They want more
Yeah.
control and more capital to manage on their balance sheet that they have custody of, and not some other company.
Yeah,
Um,
pad those revenue numbers. One of the things that these companies do is like Square, and now this company Backed, they use their crypto sales as revenue. So if we sold like $10 billion of Bitcoin, even though we're only making like 1.5% profit margin on that, pumps up our revenue numbers real good, right? And so that might be a part of the strategy here too. It's just to make that look good.
Yeah,
All
100%.
right. Let's move to quickie news. Jameson Lopp had a really funny tweet here. HSBC, when you send money transfers from bank to bank, you can put these little memos on them. And he got this warning, or he found this somewhere that says, we have noticed that some of the language used in your payment reference fields could cause offense to the person receiving your payment. We understand this may not be your intention. Please review the wording used in future payment references. Thank you for your support. So I think when they roll out the CBDC and I have to pay my taxes with the CBDC coin, I'm gonna just be saying like "F you, Trudeau" in the memo field, and yeah, we'll see if they take away my privileges or they lower my social score. What do you think about that stuff?
Yeah,
Kind
well,
of crazy, hey?
Christia Freeland will come and freeze your bank account or your
Yeah.
CBDC wallet this time.
HSBC is also notoriously like the worst financial institution if you want to do anything remotely crypto. They put in these limits where you can only send like, 10,000 a month to if it's a crypto institution and stuff like that. It's pretty wild. And there's still people who use HSBC who are in this space, which I just don't understand. But that's the problem with banks is like we talk about in Bitcoin how, we got to unbank ourselves, but it is really hard when you're locked into these financial institutions, even as Bitcoiners. Like I'm with BMO and I've been saying for years, I want to get rid of them because they had these limits on e-transfers. You could only send $3,000 of e-transfer a day. And I'm thinking like there's people in Vancouver who have like rent payments through e-transfer that are like 3,600, 4,000. Like, are they splitting them up? And so I was like, I've been so close every single time that this limit has been touched to just saying, I'm done with BMO. Like they're the only bank that has such a low e-transfer limit. And then last week they're like, oh, we're going to raise it to like 10,000 a day or whatever. And I'm like, okay, I guess I'll stay with them. But I think like, man, even as a Bitcoiner, I've had such a hard time getting away from like the bank I've been with my whole life. Do you feel the same way at all with your bank?
No, I definitely feel the same, and it's like you have that lock-in, right? It's like, hey, you're already
Yeah.
set up with them, you're already using all their product, you use their apps on your phone. They try to get you early, so you're a customer for life, and it's like,
Hmm.
um, I mean, eventually we'll all move away from that, but we'll
Yeah.
probably have similar things in the Bitcoin standard too, where you use this app or that app, and certain the hope is that we don't have a bunch of custodial apps for Bitcoin that people just use for the rest of their lives, and are susceptible to rug pulls. But
Yeah. Yeah. Oh, we got BJ Dictor in the chat here. Finally back to civilization, got signal back. Did Bitcoin hit 1 million yet? Well, it hit 100 million sats. It's been that way for a while, BJ. Get with it. TGem here says that he had a client recently insist on paying him with a physical check this year. When's the last time you used a physical check? Maybe like VC funds or those direct deposit these
yeah,
days?
that's physical check. I think probably it must have been like 5 years ago when you had to do those post dated checks for rent or whatever.
I received a physical check from the Quadriga CX bankruptcy. I got my like 13 cents on the dollar from that. That was the last check I've done. And then before that, it's got to be same thing, at least 5 years.
Oh man, my condolences for that whole thing. Holy smokes.
Yeah. Oh, it's all good. I learned my lesson. Well, I didn't really because I used FTX, but I'll get my check from that one day too. All right. The Fed announces they are increasing their oversight of banking crypto activities. So this is kind of like off of the stablecoin story. They are now detailing a supervisory non-objection process for state member banks seeking to engage in certain activities involving tokens denominated in national currencies and issued using distributed ledger technology. I don't know if I'm just reading slow. That feels like a very much run-on sentence, but that's the Fed in their own words. Nick Carter, who is on kind of the edge of all this stuff with regulation, kind of looks at this announcement as a neutral to negative thing, where essentially they're going into banks and saying, "Hey, we're going to decide whether or not you can involve, yourself in stablecoin banking." So I think up to this point, there aren't really many onshore U.S. banks that do stablecoin banking. I imagine maybe whoever, USDC works with, but all the banks they worked with went under basically, and now I don't know where they're banking. Maybe it's J.P. Morgan Chase or something. But yeah, I'm curious. What do you think? Do you think the Fed here's what I think is every time I hear a story about stable coins and the Fed and all this, I think if they were going to go after Tether for anything sketchy, they would have done it already. And they're not. So there's something there where essentially, in my opinion, they're probably happy that there are these offshore stable coins buying up, $80 billion in short-term treasuries because you wouldn't want to lose a buyer like that. But, beyond that, I don't know. It's kind of interesting where the Fed stands with these stable coins.
Well, I feel like they're just happy to have, USD as the standard within,
Yeah.
to continue being the standard with something like Tether. And then,
Hmm.
but then the idea, I think what their concern is around banks doing this type of stuff is, you're outsourcing the risk, right? So, when you put your dollars into a bank, well, the bank holds them and they're kind of responsible for that. But then you have a really weird situation where, if you deposit your stable coins into a bank and then the underlying, that now, so that bank has custody of those stable coins, but then who has custody of the US dollars? Well, the stable coin company does, right?
Yeah, you have two parties that are at custody risk then, right?
Yeah. So then for the bank, well, what happens if that stablecoin company goes down? What if not that I think it's true, that what if the Tether truthers are true are correct? Then that bank goes under because Tether collapsed. And so and who's gonna bail that bank out? Right? Are they gonna does FDIC insurance cover a stablecoin company collapse? Right. So I feel like maybe that's why there's a concern there.
Yeah, and I think they're getting in the way of that. Like, I still think it was pretty unheard of, and it got really buried how when SVB went under, the feds basically said, "Oh yeah, we're gonna like take Signature Bank too and liquidate, whatever crypto activity they're in." They just kind of snuck that in there during that whole crisis, just wiped them out of the game completely. So yeah, interesting to see what they do with this stuff. But
Well, and it
again,
was
I think like if they had they do have the power, I think, to seize probably reserves using the Swift system from Tether, and they're not for whatever reason, right? So
well, and it's bizarre too with Signature too, because they had the buyer of Signature. It's specified in the buyout that they would not be utilizing that bank for anything related to crypto anymore, and so you essentially removed that on ramp entirely. And so, what game is being played there? Something's going on, something fishy.
who knows, man? All right. Next story didn't get like press coverage, but I just noticed it as I'm a creator in this space. It's a guy named Plamen Endonov. He is a Bulgarian YouTuber talking about Bitcoin, pretty much just Bitcoin content. And this is coming after a string of these events where essentially Bitcoin YouTubers, much like myself, which really freaks me out, are getting without a single strike, just having their channel deleted off of YouTube. And usually under this harmful and dangerous policy violation notification. And so this is like, this is, you see this all the time where YouTubers will get accidentally scrubbed off of YouTube, but they'll have a following of like 200K people that'll just like brigade team YouTube on Twitter or via email, and then they get their account restored because they're top of the inbox. This guy had like 23,000 subscribers, been doing his channel for 3 years, 400 live streams, 100 podcasts. Channel just removed without a single warning or notification. And then he appealed it, and he got people on social media to appeal it. Team YouTube comes out and says, yeah, we forwarded this info to the relevant team and confirmed that the channel will remain suspended for harmful or dangerous content policies. And so I remember last year, Swan Bitcoin's entire YouTube account, and they're a corporation basically, they're not like an individual content creator, their whole YouTube account got wiped because I believe they were talking smack about, BitBoy or one of these crypto creators. And then that whole creator's, army of troll bots or whatever went and flagged that channel. And so people are weaponizing these things, I think. I don't know if this guy was a victim of this weaponization, but it's brutal what can happen to content creators. And again, like for me, YouTube is like pretty much my only outlet. I'm trying to get more videos on Twitter. I think this live stream's on Twitter right now, which is good. But yeah, what do you think about this? Like it's kind of brutal that, we talk about so much decentralization in this space. Video is one of the hardest things to decentralize because of all the bandwidth needed and the lock-in on these platforms like YouTube. Like people are, Rumble has become a bit of a thing, but they're never gonna be nearly as big, even a fraction of what YouTube is. how do we, if we can't beat them, how do we work maybe with YouTube, as creators to make sure our content doesn't get pulled from scrupulous things like this?
Well, I feel like all of these guys, like even like YouTube is notorious for censorship or self-censoring because they
Yeah.
demonetize you. If you do anything incorrectly, then they demonetize you. So they don't even need to do that too many times for you to decide for yourself that you're going to self-censor. And so
Hmm.
I feel like that's a big problem in the space as well. We need in general platforms that allow for folks to kind of be themselves and say the messaging that they need to, and not be worried about being demonetized. And so, I think the question there, and even something like Twitter, right? Is Alex Jones back on Twitter, right? I mean, I don't agree with everything he
No.
says, but he's still not on Twitter, even though Elon Musk claims that Twitter is a place for censorship resistance, which is not entirely true. And so, I think the question is, well, how do we build networks that if you want to be in a place where you're not going to be censored, make sure that you can't be censored. But then the
Yeah.
question is, how do you build that? And I think Noster has been doing a good job of building this in a manner where folks can get access to content and they can be sure that it's not going to be censored. But video isn't necessary. I mean, I guess you can link to video from Noster and things of that nature, but Noster has barely any traction in comparison to some like Twitter or even other platforms. And so it's going to have to be organic. It's going to have to be a slow, long process of building out the I don't like to say the word decentralized, but the distributed alternative. Yeah.
Mhm. Well, I think the thing that makes video so challenging to decentralize is when it comes to building a new monetary system or a new social network, the previous archive of all of the content is not that important, right? So, like when I make a new Threads account, right? Like Mark Zuckerberg launches his own social network, Threads. The first thing I'm thinking about is not, oh man, like I don't have all my tweets here. I don't have my Facebook wall post. And when I make a Bitcoin wallet, I'm never thinking about like, oh, I don't have all my like bank statements there. I don't have all my previous transaction history. It doesn't matter, right? Like, it doesn't matter that much. But when it comes to video, when a creator signs up somewhere, they want to bring their entire library with them. And, uploading new videos is a content and a bandwidth problem in of itself, because if you, let's just say, have a 1 GB, HD little documentary you upload that gets viewed 1,000 times, you've used a terabyte of data. Try it with a couple million views. You not only have that problem with new content, but if you want to bring any of the old content on, again, essentially you're stuck to just hyperlinking back to YouTube. And again, if you get censored on YouTube, you're done. And, I feel really bad for guys like this because they don't even get the warning and they can't even back up some of their videos. I try and delete, all the raw files from my videos once I've published them, because it's just like, I'm never going to edit the video again, but it's tricky. And remain pessimistic. I feel like Nostr will push through. I know Bitcoin will, but I don't know about decentralizing video. I think at the end, somebody has to pay a lot of money for those server costs, and advertisers are a big, big part of that. So yeah, I don't know.
Well, maybe something like Lightning can improve that, where like, and rather than if you can have large kind of providers of Noster services that are also running something with video and they're paid, like you stream as you pay, for example, or things of that nature, where you're paying like one sat and it doesn't really matter that much to an individual,
Mm,
but it allows
yeah,
that.
Fountain has that with podcasts, but again,
Mhm.
audio way less bandwidth than video, right? Like
True.
a factor of like 20 to 1 essentially. So yeah, we'll see. I got to maybe be more optimistic about it. All right, this headline is just getting so much attention, and we'll wrap it up after this. We had a whole section about inflation. I'll keep it to next week. We're running close to an hour here. Um, the unions have pushed, and now the United Parcel Service, after slashing its financial outlook, has agreed to a deal with the Teamsters that by 2029, delivery drivers will be receiving an annual pay of $170,000. Those are full-time delivery drivers. Even part-time employees are set to earn 25.75 an hour, which is not that great. But man, seeing all these memes about like UPS drivers are now where all the generational wealth is $170,000 a year US, right? What is that in Canadian dollars? It's like almost like 210 or 220,000 Canadian to be a UPS driver. What do you think? Do you think they're overpaid? Do you think the union made out like bandits here? Do you think this is just another sign of the collapse of fiat?
Well, I feel like it's kind of a funny meme compared to with what's going on with AI because everyone's like, oh, um, with artificial intelligence or automation, all the drivers are going to be the first to go, and yet it feels like it's the opposite, right? It feels like you have the programmers that are like cutting off each other's arm, right, off the tree branch, and at the same time you have UPS drivers that are being paid so high. So I feel like it's a funny meme when you take AI into consideration.
Yeah, and I mean, I'd like to get into this with somebody who knows what they're talking about. I still cannot figure out what makes driving so complex that they can't get AI that has figured it out. Like I've seen so many close calls with the whatchamacallit, the Teslas. And I think the easy kind of response to it, like why we don't have automated self-driving everywhere now, is because as long as there are humans in the road, there are going to be like these unpredictable situations where you're forced to pick, the trolley problem or whatever. But the economy, to me, where people stand in terms of how much money they have and access to credit, we're never going to get to a future where like 100% of people or even like 80% of people can afford to buy one of these electric cars that are self-driving. Like the government will have to give out some COVID stimuluses again, or like driving stimuluses or something, because while we are seeing a lot of new Teslas on the road and a lot of new automated cars, first of all, they're all running on different automated systems. But again, like these are, rich people who are buying Teslas. These are not like the average working mom. These are not immigrants getting these things. And as long as you have such like a low percentage of self-driving cars on the road, it's going to be so hard to perfect that AI and get it to a place where all the cars are working harmoniously. But yeah, what do you think about it? Do you have a Tesla? Do you drive much?
No, actually, well, I live downtown Toronto, so I take
Nice.
the subway all the time. But
Driving in Toronto is a hellscape, man.
totally, that's
For
why I don't
real.
drive downtown. It's craziness. But
Yeah.
I feel like the reason we don't have more self-driving cars is not because it's hard, but because liability is hard. And
Hmm.
no one wants to take the
Pricing
liability
that.
yet, or they can't yet. Um, I think we can all agree that one day all of it will be self-driving, right? Like one day
Yeah.
that is going to be the case. But then the inflection point I feel is just so difficult. So, and then the
Hmm.
other thing too is the big question around, well, as Bitcoiners, how do we even feel about that? Do we feel like if if self-driving cars come to fruition, then does that remove some of our freedoms? Is it a situation where it's like you will own nothing and you will be happy and you'll just rent access to a car that will drive and will drop you off and you won't have a car? How will people feel about that? I don't know.
Yeah, and I think, one of the things is they say like there's different stages to the autonomous driving, and it gets to a point where it's like much better than human driving. And then they can say, hey, we can even get rid of the steering wheels in this. Like we don't want to, it's so good that we don't even want to allow humans to drive. And so that's like way down the road. But that's where that gets tricky, where, maybe if you want to have a wheel in your car, we'll let people get into cars and operate cars and have cars, but not actually have driver's licenses because the cars will do all the work. It's going to create like a two-tiered system out there, but it's tricky. Like I don't know how you deal with retrofitting cars. I don't know how you deal with their goals of getting rid of all the gas cars on the road. I don't understand how you get rid of all gas cars on the road when I can drive to another country where they don't have proper electric infrastructure. Like if you're going to pass laws where I can't have a new gas car, but maybe I have to cross a border to do work, or maybe I live in the outback. Well, I'm gonna have to go and I'm gonna have to go buy an old beater to drive on, Gambier Island or Bowen Island or something like that. Like it's nuts. But
Well, let's
I
also
don't know.
talk about the carbon footprint of creating an electric vehicle, right?
Oh
Like,
man,
or
the
or the
waste.
foot or the weight and the waste and the lithium batteries, right? And then the amount of like pressure it puts on the grid. It's like,
Hmm.
and then how long is that car even going to last for? And how long until you have to replace the battery with another lithium battery? And so it's a whole
Yeah.
host of
Oh, we can get
problems.
into a whole conversation
Yeah.
about how Bitcoin mining plays a role in that, because with all that extra
Mm.
pressure on the grid to charge all these cars, you're going to have somebody who wants to consume that off-peak energy, especially if you're going to be powering it with like solar and wind, which are so periodic. But yeah, all right, we'll leave it at that. Thanks so much for coming on. If you have any last words, a little plug, or any parting words to leave us Bitcoiners and finance people with, shout it out.
Yeah, well, I think for me, thanks so much for having me, Julian. I think like my message is just like, hey, like let's keep building sound finance for sound money. I think we need a financial layer for Bitcoin that isn't just a custodian or an exchange like Rodrigo or FTX that blows up overnight. If you want to try out what we're building Atomic Finance, a simple app that allows you to earn returns in a transparent manner. You can try it out with as little as 0.01 Bitcoin. I think that's just under $300. Test it out, DCA once, and try out the app. We'd love to have you. So yeah, thanks so much for having me, Julian.
Yeah, and thanks for building this. Not only are you building a decentralized, finance layer on Bitcoin, but you're doing it in a very ethical way. If you guys didn't feel like everything was addressed in this show, and it's really hard to do it all in an hour, go check out Atomic Finance's blog here, where they have written some amazing stuff. Craig Warmke has contributed here. They have explained in these really great blog posts, very, I found, easy to kind of get through, exactly how the covered call strategies work, how DLCs work, really in depth. So yeah, definitely go check that out. And yeah, looking forward. When are we going to get the Android app? I know at least half my audience is Android people.
Oh man, well,
24, 25, maybe before that.
maybe probably 24. We'll aim for Android probably next year. We should have it on the roadmap.
I gotta ask you this, because I've just been curious, because I worked with like so many companies that do this, where it's like Android first, iPhone app never comes out, or like a year later. Why is it so difficult to like make them at the same time? Like, are they very different code bases? Like, how does it work?
Yeah, we built it actually in the app in React Native, so it's fairly easy to be cross-platform. I think the challenge is when you're when you're a small team, especially when you're building something for Bitcoin, you want to make sure that security and like the actual user experience is as good as possible, because you're dealing with people's money. And so after
Mhm.
every update that we do, we go through a rigorous testing process. And if you imagine how long it is to do that for
One
Apple
device.
devices, which is like,
Yeah.
okay, there's only certain sizes of them, and then you take Android into account and you have to do the same testing process. It's very, very difficult. And so that's why for us, like, we're just focused on growth right now and getting more folks using it. And then likely when we, have more people using the app, more kind of revenue stream coming in for us, like we can expand the team, and then it'll be easier to have one team for iOS and one team for Android. So it's just a
Nice.
team scaling problem.
Cool. Well, looking forward to it. Well, thanks so much for coming on, Matt. Take
Thanks for having
care.
me,
Hope
Julian.
everyone here watching enjoyed the show. If you're still watching, you haven't, please give the video a like. If you think anybody would find this interesting information about atomic finance useful or educative, please feel free and share the video as well. I really want to get more people looking into the DeFi and the deeper layers into the Bitcoin network, because it's not all about hodling, and maybe it's not all about spending on custodial wallets. There's a lot of interesting stuff going on in the world of Bitcoin, and I'm so happy that you and Tony are working on stuff like this. So yeah,
Let's do it. Let's keep building.
cool. Take care. Have a great weekend, gang.